How's it going today, guys? Welcome back to the channel. Hope you're having a great day so far. So in this video today, we're going to be doing a update on my M1 Finance dividend stock portfolio. Now, real quick, guys, I just want to mention that I just moved to my new property in Miami, Florida. I ended up moving for lifestyle and tax reasons. So I don't fully have my office set up yet, but I'm hoping to have that soon. So I might have a couple of videos here where it's just a screen recording simply because I don't have my office set up yet, but I still wanted to make sure that I was putting out good content for you guys. So that being said, one of my goals for this year is to be way more consistent with my portfolio update series because a lot of people, I think, get so much value from this, and I've been getting more requests for that. So basically, every single month, I'm gonna update you on the progress of this portfolio on YouTube, as well as Instagram Reels and on TikTok. And we're gonna be talking about all different things on each of those different platforms. So I highly encourage you to follow along. Also, guys, just to cover this, this is not any kind of financial advice here, guys. I am not a financial advisor, and you should always do your own due diligence above and beyond this video before making your own investing decisions. Also, I am affiliated with M1 Finance, so if you want to give back to me for this content, you can feel free to use that link below. Now, that being said, guys, my portfolio has been on a bit of a tear lately, and this is the all-time high that this portfolio has ever been. Now, for context, I'm going to show you guys right here. I actually started this portfolio, it was a little bit over a year ago. On January 6th of 2020, that is when I put my first couple of dollars in this portfolio. And a lot of the reason why I've had so much money gained from this portfolio is based on the time period when I was investing, which was largely during the pandemic, during this period right here. So before the pandemic was really even over, I had invested about 50 grand into the market, which really helped me get some exceptionally good prices on many of the stocks in my portfolio. But we're going to continue this series here, even though it's well beyond a $100,000 stock portfolio. You know, we're just going to see how big we can build this thing. So I encourage you guys to subscribe and follow along. Also, real quick, guys, I just want to say thank you to today's video sponsor, which is me. And that is because I literally just spent like an entire month of my life creating this video that you see right here called Stock Market for Beginners 2021. No, your eyes are not deceiving you. This is a 3-hour and 17-minute long video that's literally a step-by-step presentation on pretty much everything that I know in the stock market. So I'm going to put a link down in the description for this and a card in the corner. If you've been watching any of my content in the last 5 years, guys, this is the most valuable video I have ever uploaded on YouTube, hands down. And if you do jump over and watch this video, just leave me a comment that says came from M1 Finance video, because I'm always curious if people actually, you know, follow along when I make these suggestions. So highly recommend that, guys. I would love for you to check it out. I think there's tons of value there. And it's been one of the biggest projects I've done so far this year. But that being said, guys, the main focus of this video here, aside from just updating you on the stocks, is that I ended up rebalancing this portfolio. And I'm going to explain what that means a little bit in this video. And during that process of rebalancing, I ended up adding 3 brand new stocks to my portfolio. And I'm not going to clickbait you guys. I'm going to tell you what those 3 stocks are now. Number 1 is Texas Instruments. The second stock that I added was Walmart. And the third and final stock I added is Logitech. And I'll give you a little bit of reasoning behind those in a bit. But I essentially rebalanced my portfolio because some of the stocks in my portfolio had gone up so much, so fast. I was starting to get concerned, and I wanted to start taking some profits off the table. In particular, that was happening with one stock here, which was Bank of America. I ended up investing in this stock during, over the summer, I believe. If I click in here, it should tell me when I made my initial purchasing, if I can find that. So I ended up buying Bank of America stock over the summer, and as you can see here, my average price per share was $23.86. And this is now almost a $40 stock. So that's a really wild return to have in a very short period of time. And if we look at the last year here, you can see where this is where I rebalanced. So you can see where the value went from 15, 16,000 down to 9, because basically what M1 Finance did for me is sell some of the gains off from Bank of America and my top performers and reinvest that money into some of the new stocks that I added, as well as ones that I don't have the right allocations. So basically, I started off with this position in Bank of America of $5,400. Actually, it was in September of 2020 when I bought this, so it wasn't even that long ago. And that went from like $5,000, and then I was obviously investing, I think, a little bit more money here, and it went all the way up to somewhere around $17,000. So then I rebalanced, and automatically it sold off some Bank of America, and then dropped that down to an allocation of around $9,000. And even then it's gone up quite a bit, up to, $9,700 now. So that was why I changed around my portfolio. I didn't add any new money, but rebalancing is kind of a really cool feature you have available to you if you're looking to maybe add some stocks or, change your risk allocation in your portfolio. However, the most important thing to understand is that when you rebalance, you are potentially having a taxable event occur. So in my case here, it was a bit of a tough decision of, do I just leave Bank of America the way it is until it's long-term capital gains, or do I take some profits off the table? And because it's had such a massive run-up, I decided I was going to rebalance, and I'm not going to have to worry about the taxes on that until basically 2022, but it wasn't a heck of a lot. I think it was around $4,000 of realized short-term capital gains when I rebalanced. But I think that's totally worth it to have a better diversified portfolio across a lot of different stocks, because a number of them in my portfolio I was concerned were beginning to overheat. And I actually went ahead and took a screenshot here when I did the rebalancing, which was a couple of weeks ago, because I wanted you guys to see what was sold off and what was largely purchased. So I ended up selling $32,455.19 worth of stocks, and M1 Finance did this automatically based on their algorithm figuring out how to rebalance. So here's some of the stocks that were sold off. Bank of America was the majority, almost 7,300. Caterpillar, Intel, Emerson Electric, Genuine Parts Company, Microsoft, IBM, National Grid, Apple, and McDonald's. And in return, I purchased about $27,000 worth of my new stocks, which were Walmart, Texas Instruments, and Logitech, and it added more shares to Procter & Gamble and Johnson & Johnson. And personally, based on what I was seeing happen with Bank of America and Caterpillar stock, and a lot of these names, how they were going higher and higher every single day, I felt way more comfortable moving some of that money into these tech stocks and into Walmart, which all of those had actually recently sold off. So I was, more interested in stocks that were not necessarily at all-time highs, but were good companies that recently went on sale. So just to show you a couple of the stocks in my portfolio that I was a bit concerned about, obviously Bank of America, I purchased this, like I said, around 22 per share in September. So I bought it somewhere down here actually, or no, if it was September, it was back in this area. And again, it shot up like a rocket. So I got concerned and wanted to take some money off the table. Same exact story here with Caterpillar, guys. I got into that one around the same period. And stocks don't generally move in a straight line like this. I hope the company continues to do well as we all get back to normal life here and there's more construction, but this is something that concerned me, so that's why I decided to take some profits off the table. Intel was another one. I purchased this stock after they had a sell-off earlier this year, and they've had a massive run-up from like $45 all the way back to $65. I'm not as concerned with Intel, because if you look at the 5-year chart, they're not even back to their all-time highs. But, you can look right here in the last day alone, this stock was up almost 5%. So chip stocks are surging right now, and so a lot of Intel gains came off the table and were reinvested into those other stocks. And even some of these blue chip names like Genuine Parts Company, this was one of the first stocks I bought in the peak of the pandemic. This stock is, again, back to an all-time high. It was as low as like 58 bucks a share. Now we've doubled that back to, $120. So that's another stock I wanted to sell off. And the last one was Emerson Electric, so we'll take a look at that chart now. This one has had one of the most incredible rallies that I've ever seen with a stock. Again, one of the first stocks that I bought during the pandemic. And I mean, this was insane here. And a lot of people don't even know what Emerson Electric is. You know, this is a big blue chip dividend aristocrat. This isn't like even what I would call a growth stock, and it had incredible performance here. I mean, if you look at the last year, the stock is up over 106%. So those were the stocks I was worried about in my portfolio, but that being said, here are the ones I am excited about that still seem to have room to grow. First of all, IBM. People have been sleeping on this company. It's done not much over the last 5 years, but it's had a couple of good trading sessions in a row here. And if you look at the last month, it's up around 15%. So I would love to see IBM getting more traction, and this could be a great leader in my portfolio for the next month. Similar story here with 3M. This was like, I believe, the first stock I bought in this portfolio, and it has never really done much for me, but over the last month, it's up around 11.3%. And if you look at the 5-year chart, you know, this stock used to trade at $2.50 a share. So there could be a lot of room for this company to go up, and it's on a nice trend here so far that started back almost a year ago. So 3M obviously sold off during the pandemic, not probably as much as everyone else due to the medical aspect of their business, but because they were supplying medical masks, I think they were seen as a bit of a hedge. But you know, there's clearly still potentially room to go here for 3M. And then another stock on my list that I'm excited about here is McDonald's. If we look at the 5-year chart, while they are up, they've been in a bit of a period of consolidation here. And if we look at the last year, you can see they were up as high as 227, and then they began to slide. So they are consolidating right now, and you know, I would love to see them move higher after that period of consolidation. So I would expect to, you know, potentially see McDonald's do well. And then as far as the new stocks I added to my portfolio, Walmart for me was a no-brainer. They've traded as high as somewhere around 150, 152 a share, and they went back all the way down to around 125 or somewhere. So for me, that was a no-brainer to add Walmart to my portfolio. Logitech as well has done exceptional over the last 5 years, and then they ran into a bit of a hiccup. But they've been doing pretty good over the most recent span of time here, going from, you know, 90 bucks a share back up to 100. So I am still down a little bit on this stock, but I expect it to do well in the long run. And then Texas Instruments, unbelievable day it had, up 5.44% on Friday. But if we look at the 5-year chart here, again, they had a bit of a hiccup, but they're right back up to all-time highs. So super excited about this new addition to my portfolio as well. So that being said, guys, the last thing I want to do here is cover the overall holdings of my portfolio. And my cost basis here did go up a little bit because I rebalanced my portfolio, but I didn't actually add any new money to this. Based on that new cost basis, from some short-term capital gains, the gain from this portfolio is 21.32%, or around 33.5K. We'll go ahead and sort this by the largest unrealized gain. Lowe's, again, that's another stock I forgot to bring up that I'm concerned about. It's just done so well at all-time highs, so some of the gains from Lowe's came off the table. Emerson Electric up 84%, but about 85. Bank of America is up 62. Caterpillar, I'm up 55%. Genuine Parts Company, 55, give or take. Apple, I'm up about 37. Intel, about 26. Microsoft, 23.5. 3M is up about 21%. Coca-Cola up 17.7. McDonald's is up around 14. IBM is up around 11.5. Like I said, I hope that one continues to do well. Johnson & Johnson is up about 8.5%. National Grid, my former employer, that utility stock is up around 7. Texas Instruments up around 6.5. Walmart, a newer purchase here, up around 3%. Procter & Gamble is up only 2%. Merck is a little bit, 1% down, so pretty close to break even. Verizon, I'm down about 2%. And then Logitech, I'm down about 3.5%. So right now, I'm super happy with this, guys. You typically have a lot more red ones in your portfolio, but I've been pretty good here, I guess, strategically when I'm purchasing these stocks. So I'm sure I'm going to have some stocks that don't do well in the long run, but I'll continue to update you guys here every single month in this format of video. Also, guys, if you're curious how I built this portfolio from scratch, I have a completely free training video that walks you through step by step how I built this dividend stock portfolio, that's going to be the very top link down below if you guys want to check that out. But anyways, guys, thank you so much for tuning in. Hopefully we might see, I don't know, we could see $200,000 portfolio next month just from market gains. Like I said, I don't really plan on adding any new money to this portfolio this year because I have other areas I want to add to, not so much my dividend stocks. Because I want to put more money into different types of investments to further diversify. But we'll keep on updating you guys here. I hope you enjoyed this. If you're new, make sure you subscribe and hit that bell for notifications. Leave me a comment with what you think of this portfolio. And then, of course, be sure to check out that 3-hour Stock Market for Beginners video. Thanks so much for tuning in, guys, and I will catch you in the next one.